Hello, today is the 15th of June, 2024. We'll do our disclaimer, go over our calls and make some predictions. This is my trading plan for Monday, which is June 17th. Please remember my calls can be completely wrong. Any trade you make should be made at your own risk. Also remember the MEJT system gives targets, it doesn't give entries, although targets are support and resistance levels. For example, we have this price target after Thursday's trade, 54.2265, that printed, and here's resistance right at the level. We broke through that, but we stopped the resistance from the June FOMC price right here, and this price often separates markets going up from markets going down. So if we're going to continue the rally, it would be helpful for us to go up right through that price immediately at the open. If this price holds, it's a perfectly logical place for this to end. Prior to getting into Friday's action, I got an email request to go over the unfilled MEJT targets from last year. I like to keep people happy, so here are the targets. Two of last year's unfilled targets have printed this year, but we still have all these to print. I don't think these are close enough to the current price to have any relation to immediate future action, though. Okay, let's get back to work. Look for the pattern with the early high, which is this, and Monday should have the early low. We got our price target. We had mixed signals, and the commonest thing would be a gap and a prompt move outside of Thursday's range. Well, here's Thursday's low. We got the gap, and we missed trading outside the range by a little over 1 point. 1 point isn't very much, but it's not what I said, so we have to go to the next most common thing. Next most common thing is to close a little change and have a big move the next day. Well, the market's over 5,400. We closed down 2 points. That's about as close to unchanged as you can get. So this is the pattern that's playing out, and if it continues to work, Monday should have a big move. Now, it doesn't tell us the direction, but it does tell us the odds favor a big move Monday. These are the patterns we should see next week. Don't forget Wednesday the market's closed because of the Juneteenth holiday. In the afternoon, MEJT gave an ultimate sell signal. We did drop. System said it was a false move. Price that would retrace over this line, which they did. Railing all day on a Friday usually carries through into Monday's open, but it's negative if that doesn't happen. I'm a little bit suspicious of the timing of this last move. You've rallied all day, 5 minutes left to trade. You're under all the highs from the past couple hours. Then you get a wall into the close to a new high. That's not when serious money's going to buy with abandon. Now, the wall into the close doesn't always gap down, and it's less likely to do so on a Friday because, especially when you rally all day, markets usually continue higher. But if you do gap down here and you don't continue higher, it's very negative. That we're not going to know until Monday's open. So we have a strong rally into resistance. Either you gap over resistance or resistance wins. Well, here's our long-term chart. It's a daily chart. We call this low to the penny in October. This was the last decline. That's 38.2%. We take a 261.8% retrace of that, you get the recent highs, so you've got Fibonacci resistance at these highs. So there's resistance from that Fibonacci. there's resistance from the FOMC price. There's also the fact that the first move after the FOMC announcement was down. So eventually, because the first move is down, the market should drop. It doesn't mean we have to drop here, but if we do drop here, it's a logical place. We're going to use the mixed signals rules again. Monday's pattern has the early low regardless of where we open. Typically it's a rally day with a high and a final hour, but if it's weak, more weakness should follow. Friday we gapped down, hit a lower low, but closed over intraday lows. We rallied into the close, and that usually follows through into Monday's open. So all that's positive stuff if it's maintained, and that's in capitals, if it's maintained at the open. But there's a strong chance, I think a very strong chance, that's not going to be maintained. There's a strong chance this resistance is going to hold and we're going to drop instead. We don't know that for certain till the open. We don't have to risk any money till we know. After gapping down Friday, all we've done so far is back and fill. We haven't closed over a prior high. And if you have a big drop and just back and fill, the big drop is what I pay attention to. New lows outnumbered new highs despite the rally, and the percentage of S&P 500 stocks over their 200-day moving average fell, and none of that is favorable stuff. It means fewer and fewer stocks push the market higher, and even with fewer stocks pushing it higher, it couldn't undo the damage of the early drop, and that's not good stuff. It could all change. If we gap up and hit a new high on Monday, the market's fiscal day doesn't end at the close, ends at the next day's open. So you don't know, but if we stop here, that's not good stuff. Now the first move after the FOMC announcement was down, so the odds favor the next move of consequence being lower. So if, and that's in capitals too, if we start down Monday, there's a good chance last week's high will hold as the market begins a tradable decline. If we go higher instead, the days of the rally should be numbered in any event. You're not going to get sustainable moves up with fewer and fewer stocks participating. That just doesn't happen. And we're right at a typical resistance area based on the rules I use. So we'll have to see if we gap over it or if resistance wins. It's the pattern with the early low. I think the early trade is going to be very telling, because if it's higher, nothing requires us to pull back anymore. But if it's lower, I think we have all we need to take us much lower over the next few days to weeks. It's the pattern with the early low. That's today's call.